Hello, and welcome to the Exponential Growth Podcast, powered by Analyst Investors. I'm your host, David Olivencia, co-founder of Analyst Investors, and a passionate advocate for leveraging innovation and technology to drive success. In this podcast, we'll dive into the strategies that top leaders, investors, and entrepreneurs are using to navigate and thrive in this era of accelerating technological change. Whether you're looking to lead more effectively, make smarter investments, or understand how to harness disruptive technologies for exponential growth, this podcast is for you. Each episode will feature conversations with visionary thinkers, industry pioneers, and innovative leaders who are redefining what's possible in today's rapidly evolving world. So if you're ready to start and stay ahead of this curve, let's get started. This is Exponential Growth. All right, everyone. Well, hey, welcome to another edition of the Exponential Growth Podcast. Today, we got a special leader. I've known this leader probably a good 5-6 years or so in board of director circles and some of our Latino circles. Both of our family are from Puerto Rico, so we have that as well. But amazing background, Purdue University, IIT, Harvard educated, and then just I knew a lot about his background, but as I was going through, I said, man, a lot of different things. Worked at Abbott, worked at some of the top consulting firms early in his career. Then I did a stint in the government, a little bit for the SEC and the SBA. He's now an adjunct professor at Foster in Washington. Many boards, and really some interesting boards when you look at it. And I might miss a couple, but Swedish, which is a healthcare board out of Washington, serves on that board. The only agency where he's chairman of the board, and that's an interesting one. We'll maybe talk a little bit more about that. You might have seen this leader on CNBC. He speaks there regularly. They'll interview him for his perspectives on almost everything because he has such a wide background, but obviously the economy and business and what's going on there. And then he's now managing partner at Master Impact Holdings and an operating partner at Presidio Investors, and a board member at Hennessy Capital Group. And they got a couple other sub things and a couple of boards. And I said, Javier, how the hell do you find time to do all this stuff? So anyways, welcome to the Exponential Growth Podcast, Javier Saade.
It is awesome to be with you. I got to tell you, I sound much better on paper. Well, some people say that I sound amazing on paper. Some other people say that I'm schizophrenic and nuts because you can't figure out what the hell I'm doing. I still am figuring it out. That's the beauty of life.
Amen. So that is I touched on just some of the highlights, right? So in this podcast, we like to go a little bit deeper and, tell us your story a little bit, kind of how it started. I think you were born in Puerto Rico, but you go to Purdue, you got this interesting journey. So fill in some of the gaps and along the way for our listeners out there.
Yeah. Born and raised in a middle-class family in Puerto Rico. And I left to go to college, and I ended up in what is probably the exact opposite of a Caribbean island, the cornfields of Indiana at Purdue. And then after Purdue, I ended up joining Abbott Laboratories, a big pharmaceutical company. My degree in Purdue was industrial management and industrial engineering. So that's kind of what I did. I was making things, inventory control, supply chain. I supervised a manufacturing operation. And while I was doing that, part-time, I got a master's of science in operations and technology at the Illinois Institute of Technology. I was doing that part-time. It was super intense, thinking that I wanted to stay in operations. And I ended up sort of getting a taste for kind of the business of business, finance, marketing, and I wanted to switch at Abbott. And basically, it was the first of many lessons that when a window closes, a door opens. And basically, they told me, if you want to go to marketing, you got to start at the bottom. And by then, I had a couple of promotions. So I ended up, you know what? I'm just going to go somewhere. And I ended up at Booz Allen, a big consulting firm. And my first boss, another serendipitous thing at Booz Allen, was a Hispanic guy from Nicaragua that had gone to a Jesuit high school. I went to a Jesuit high school in Puerto Rico. He went to a Jesuit high school in Nicaragua, and he had gone to HBS for his MBA. So like a month in, he's like, you should apply to HBS. And I'm like, are you out of your mind? Like, I'm already making like $60,000, more money than I could ever dream of. And I'm like, it's a crapshoot, right? These places are so selective. And I applied and I got in. So I went to HBS, an incredible experience. After HBS, I went to McKinsey, another big
Harvard Business School. For those who are listening and don't know what HBS is, Harvard Business School.
Sorry, I was being the prick with the lingo. Yes, Harvard Business School. Thank you. And then McKinsey for a couple of years. So that's kind of the first. I think of my career in chapters. That's kind of the first chapter of my career. Sort of big institutions, either operating in and consulting to. And I left McKinsey mostly because my first marriage was falling apart. And in another serendipitous situation, I ended up working for a partner. I worked for a McKinsey that was trying to sell a biotech company to Big Pharma. And I went in as a kind of an interim COO, and we were presenting to the board. I was preparing the presentation. I was still like a young kid. And the guy was like, why don't you present to the board? And I'm like, okay, sure. And I presented to the board, and the chairman of the board was a venture capitalist. And that was my in to this amazing world of capitalizing, growing, investing, helping, operate companies. And that was kind of, Jesus, it's so long ago, 2002. At the same time, I co-founded a company. So I had kind of one foot in the canoe and one foot in the dock, investing and starting a company that now defunct, called Air America Media. And the only claim to fame that the company had, and we were way ahead of the curve, even though, as you know, David, investing in early, if you're too early with something, you fail. If you're too late, you don't make it. Totally. So we were chopping up. Originally, the programs were to go through radio, like terrestrial radio, regular radio, but we were chopping up the programs into bite-sized chunks that we were distributing by the only way you could do it in 2003, 2004, which was iTunes, short form spoken word programs. You know what we're doing now? Exactly that, but it's called podcast. And so we were way ahead of the curve. It's just the technology didn't exist. You couldn't, compress
distribution,
yada, yada, yada. And then, the rest of kind of my trajectory has been kind of a zigzag line between venture capital, private equity, hedge fund. I spent time at Bridgewater Associates, which is a very large hedge fund.
Oh, yeah. Oh, yeah. It's amazing. That's a whole nother, for those who are listening, that's a whole nother, I wouldn't say amazing culture. I'd say interesting culture.
Yeah. I lived it. I lived it. And Ray Dalio actually hired me himself. Back then, it was very big. It was the largest then. It is still the largest now, but it was smaller in terms of people. Very interesting culture. After that, I ended up doing emerging markets private equity. So I was buying companies like all over the world, and really super interesting, kind of eye-opening. And then I took a sabbatical in late 2012, early 2013, trying to figure out what I was going to do. And I randomly got into a White House thing. And 6 months later, and 13 proctology exams by the FBI, I ended up in a super interesting role, as you alluded to, serving this beautiful country in a public policy role that kind of combined small business investment and innovation, but from a public policy lens. So I was the associate. It was very long, the longest title I've ever had. Government loves big titles. Associate Administrator, Chief of Investment and Innovation at the SBA. So the remit was pretty big, tens of billions of capital, tens of thousands of investments, really, really interesting. I sat in a committee at the SEC for small and emerging companies. Those are either private companies that do the Reg 144, all private equity and venture capital owned companies, and companies with less than 2 billion in market cap. Something the audience may be familiar with is accredited investor rules, which dictate who can invest. It's kind of a flashpoint now. So that was one of the things we were looking at. Really interesting is who should be an accredited investor. And actually, I'm going to ask you a question, David. One of the law says that you either have, 300,000 in income or $1 million of net worth.
Yeah, right? 200,000 or married, 300,000 or $1 million in net worth minus your house. I don't think you can include your house in that. Yeah,
exactly. So you could have a doctor that has never made an investment in his or her life, who is an accredited investor, or a brand new minted MBA that's in debt. So the question is is that and this has been a flashpoint for people that have access to the companies you fund, David, like early stage stuff where the capital appreciation is so massive, but kind of set aside for people that already have money. So what's the point? So really interesting from a private sector perspective, but from the people advising the SEC on what's best. It's really interesting. And then after the administration, a bunch of other stuff.
Yeah. On the accredited investor side, I testified in Washington, D.C. on Capitol Hill, the Financial Services Committee in the House, I don't know, maybe 3 years ago. And it was right around about that theme, right? And yeah, I think there was a certain, it's definitely, you could be brilliant. You can be a brilliant MBA and in debt and be smarter than, a great investor. So I think it's like education or certification. And then I think it's also, because these are riskier assets. So it's like, hey, you can only allocate a certain percentage of your. But by the way, there's a lot of risky assets out there that people can, do nowadays, right? Bets, Kalshi, crypt. There's all kind. It's like, oh yeah, but these private ones, no, you can't. But yeah, so now then now call it this next chapter, or maybe walk us through the next couple of chapters that happened.
Yeah. So after the administration, I joined an amazing guy, Raj Date, who was also, we started crossing paths at McKinsey. So like with the dinosaurs roamed the earth so long ago. And he had a similar role to me, but at the CFPB. The Consumer Finance Protection Bureau, which was born out of the financial crisis. So he started a firm, and he has an amazing background, but he started a venture capital fund that invests in fintech. And when I left the administration, I joined the firm he had started a couple of years back. That firm still exists, and we've had a couple, like all venture capital, lots of losers, some sideways, some singles and doubles, and then a couple just massive home runs. Probably one of our biggest hits was Circle, which went public last year. Is a massive hit for us, but now so tiny compared to the IPO we just had, which is so stratospheric in terms of capital formation, and kind of harks back to the conversation we were having that so much of the capital appreciation happened when the company was owned by 20 firms and Elon, right? Usually companies go public, like Amazon, most of the appreciation has happened as a public company, right? So we can go into a rabbit hole there, but then like around 2019, I decided I wanted to start a bank for some reason, some crazy reason. And I started like shaking bushes and stuff, and COVID happened. And at that point, I was kind of like, well, I want to do maybe a few more things. So I kind of, the chapter I'm describing now is one where it's kind of a basket of endeavors that none of which are full-time jobs, all of which added up are not a full-time job, but it gives me, I'm blessed and cursed with a short attention span. So it gives me the ability to direct my energy to a lot of different things. So I'm now a venture partner of that fund that was described with Fenway Summer. So not full-time, but still a partner. I'm operating similar role in a private equity firm, so very different, called Presidio Investors, that buys control stakes like a typical private equity fund in
Yeah.
technology, financial services, and media and entertainment companies. And as you said, I'm a contributor on CNBC, which is a really interesting outlet. I have a podcast myself, and I look forward to distributing this with your permission on my podcast. Top of the game, shameless plug. I also I chair a couple boards of companies we own. One is in media and entertainment, the only agency. The other one is in financial services. I'm on the board of another private equity firm-owned company called VCheck. So if you ever get your background checked, VCheck is by far one of the largest ones that does machine-assisted, human-centric background checks.
Okay.
We can get into what that means. And then I'm on the board of one of the largest healthcare systems in the United States called Providence Swedish. And I'm on the board of two investment companies. They're publicly traded, part of Hennessy Capital Group. So kind of a really interesting mix of stuff. And
the board's got to be tricky because they got their board meetings and you got calendars and travel. So, I mean, just that, I mean, it's got to be, it's got to keep you busy though. I mean, to your point, and it's all cool, really cool stuff, really cool industries, leading healthcare, tech, it's pretty exciting, man. But like, what'd you say? You're blessed and cursed with your attention span.
It is what it is.
Well, cool. No, it's an amazing journey, and you live in the Seattle area, Washington State.
Yep, love it.
Okay,
amazing place.
Yeah, no. I tell you that the drive from Seattle to Central Washington is like I'd say the top 10 most beautiful drives that I've done in the world, really. I mean, definitely in America, but likely the world. So it is a beautiful place. Okay, so Exponential Growth Podcast. So the thesis, right, of the podcast is like, hey, we are in times of just exponential change, a lot of it driven by advances in tech. We talk about trends. How do you invest along this stuff? And then what's it around leadership? So trends. So to our audience out there, and it's pretty diverse, right? It's there's some university students, there's some corporates, some board members, and all demographics. So when to that audience, what would you say that from your lens, what technology trends you should say that you're seeing? You said, man, this stuff, people aren't paying enough attention to it, and it's going to be big. What would be the top two that come to mind?
It's the first letter of the alphabet combined with I. It is daunting what is happening, not because of the power, the algorithmics for this to be happening now. It's kind of compounding secular macro trends and super cycles on top of each other, starting with, I'm not going to go back to electricity, but let's go to the transistor, silicon, personal computing, internet, mobile. All of that combined gave you three ingredients: data at massive gargantuan scale, speed to process said data, and then the algorithmic sophistication you need to extract insight from data. And that's kind of, as I know you invest in this stuff, AI is nothing but basically math applied to inference. And it is daunting from many aspects. One is that you can view it from a risk perspective, right? There's like the Super Bowls and the Super Bears on the asymmetry of risk reward. If we get everything right, which is impossible, that's not going to happen. But let's make believe if we get everything right, the sky's the limit. Cure disease, if you're talking about the layer being kind of laid now, akin to fiber when in the late 90s for what we have now with internet and mobile, it's the apps that are going to run on top. So financial services democratized for all. Combined with crypto, no more fiat currency, less centralization of the ledger, of the national ledgers. On the healthcare side, discovery alone, like the discovery of compounds or bioengineered, right now it's beakers with some data, and soon it's going to be personalized medicine for the cancer you have as early as human. That it is mind-boggling. That's the reward. On the risk side, and the reason I said asymmetry is if we get one big thing wrong, and we do get to AGI or ASI, artificial superintelligence, I don't know how you put the genie back in the bottle. So this push and pull, and I don't know when this is going to be released, but this is a really hot topic in Washington now because, as you know, Anthropic's latest model got pulled because there were concerns that it was able to hack into 90% of the super top secret. So that said, we're in the early innings. It seems like we're in the thick of it.
Yeah.
We have no.
We're the first pitch of the first inning, or maybe the second pitch of the
second pitch. I agree with you. I mean, I would say we're in the second inning, to use the analogy.
All right, maybe the first pitch of the second inning.
Yeah,
I'll give it to you.
Okay, I'll give you that. First pitch of second inning. We have no idea where this is going. We have a general idea of what the direction of travel is, but remarkable what's happening. So it's hard to even talk about anything else. And if you talk about space, for example, the space frontier, I know you just recently talked about this. Yes. That opportunity that Elon saw, decades ago, and that he's trying to maximize. I don't know if I buy the 1 million people on Mars by 2100. You first gotta go to Mars at scale. But I do buy that it solves maybe some energy problems we're having to scale AI. It does buy you the capability to break through, to go to space. Those breakthroughs get whittled down to a lot of other industries. So the wedge, the technology wedge that's the space frontier is doing for humanity is incredible, but it's AI centric. Like if you read the prospectus, S1 was AI. It wasn't necessarily
the data centers, and it's like a big driver is data centers in space, right? There's all the resistance of creating them here. And actually, I think I read it today that they're not going to meet the projections of what they wanted to do in data center build outs, terrestrial over the next year or so. So space is becoming more and more an option. It's a little bit more, supposedly more efficient. So So you're AI big, but I like the way you laid that out. And it is, and it's but the funny thing is I come across people all the time, I do this podcast, I'd say 80-70% of the people, they say, hey, it's AI, but they have different, but then I come across everybody and like, they don't know, they have no idea what the hell's going on with AI. And I'm like, I go, there's a train coming in. I don't know what you gotta get, you should be figuring out how are you using this, this rapid advances in technology, right, to benefit yourself. But it's and then I think I think I read today, I think it was in the Wall Street Journal that was it China, I think was stealing, or Alibaba / China was stealing. So, Anthropic, they're cranking out all these amazing models. And then, China's out there stealing them. And then, you got the whole, the US China, competition on AI, and who knows where it goes, genie out of the bottle. And, that's a whole nother podcast episode. But so those you'd say are your big, call it space and AI, you'd say are the big trends that people should keep their eye on.
We're watching it. We're investing in it. But again, these, as you know, these are all sort of bets that have a range of outcomes based on I don't know if they're normal distributions, things like Anthropic, OpenAI, and SpaceX, which have sucked out 80% of venture capital in the last 12, but it's insane, right? That's not a normal distribution, right? The winners are just Massive. But yeah, I think the geopolitical thing you brought up is worth unspooling, if I may. The the way humans have organized themselves are around nation states, right? That's how we think of ourselves as Americans, the Chinese as Chinese. But this technology layer, we're also citizens of, just think of Facebook, for example, 5 billion people connected. That's the largest nation on earth. They,
Yeah.
some of these companies have market caps of that begin with the letter T. They're bigger than most countries in the world in terms of market cap to GDP. So the thing I think you brought up, that the China US arms race, if you will, is actually a humongous, I think, is one of the biggest determinants of I think prosperity for humankind forever. And that sounds grand and that sounds crazily kind of hyperbolic. But if you think about the spend that the hyperscalers are doing, and the very frontier stuff that startups are doing now, and the application of that AI, and I see it in companies that are not AI native, my private equity world. How are we using AI to make money? We still haven't figured that out. I mean, the spend on AI is huge. The return is still infinitesimal. So yeah, I think it's going to take a while. It's sort of a science experiment at a scale we've never seen. And it's in synchrony, everybody at once. But at the same time, I think the risk, the geopolitical and the asymmetry of the risk reward of getting the technology wrong is a real thing.
Yeah, it's gonna, it's amazing. And I'm an investor in this as well. So you got to keep up on it, and it's changing really fast. And I was speaking with somebody this past week, and he's like, hey, I do my day job, but I got to spend another 3 or 4 hours just keeping up with everything that's going on with AI, or I feel like I'm behind. I said, so I think that's the time. That's the times that we're in, right? I mean, that's the time we're in. So good. Well, I think those are amazing. Yeah, we'll keep, this is why I'm doing the thesis of the podcast, right? So to kind of give diverse perspectives on these things. So thank you for that, Javier. Investing. All right. So there's all this stuff going on, and we have, broad set of listeners out there. Just your general philosophy and what is, investing. Your general investing philosophy, and then how in all these times of amazing change, how should people think about investing?
Yeah, I mean, the best way to be exposed, I believe, to the most amazing economy the world has ever seen, which is ours, is to be invested and exposed to the markets. And the markets and in capitalism, capital formation goes from your mom lent you $10 to start your own little car wash, which was actually my first business. I started a little car wash because I had to buy a hose. And from there, venture capital, private equity, debt markets, eventually collateralized bonds, and if you take it all the way to the extreme, what is now the best way to get exposed to markets, which are very low cost ETFs.
Yeah.
Which are called passive investments because you basically buy the market. You buy the S&P 500. You buy every company in the world. There's an
a space one. There's a space one. There's a health one. There's all kinds of them, right?
It's crazy. And I think recently, this was maybe a couple of years ago, passive holdings in, let's call it the American economy, but these are American companies, surpassed mutual funds managing, that actually actively manage the companies. And there's research to say that being exposed over long horizons, that being exposed to the market via active or passive managers is almost no difference in alpha. So you might as well buy the cheapest way to get exposed to the market, assuming you got a long horizon. So I think the hardest part in investing is not necessarily assessing risk. I think is understanding what your horizon is. If you're young Um, the power of compounding, even if you don't get it quite right, even if you're a little below what the overall market is doing, 7% compounding over 40 years is 12x your money, right? That same 7x, that same 7% over 10 years, you and I, right? We have 10 years, they call it to retirement, whatever the hell that is. That doubles, right? So in a quarter of the time, in a little bit more time, you magnitudes. So to me, it's the power of time, just father time doing its job. Forget about picking stuff. On the entrepreneurship side, I think that there hasn't been a better time, and I know you do this. You run the most prominent angel investing group in the United States, focus on for Latinos, by Latinos. Um, um, the best way to set your own destiny, create wealth, yada, 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 is to start your own thing. And there has not been a better, more frictionless time than today. And that goes to youth as well. Most young people, because we're stupid when we're young, or because we don't know any better, or because we don't care if the world explodes, you don't care, you just get up and keep going. So the advent of time is actually a really important thing in entrepreneurship as well. And starting a company is an investment. You're right. If people don't think about it that way, but when you start a company, you're investing your most valuable thing, which is your energy and time. That doesn't come back, right? So anyway, I don't know if that was too esoteric, but that's kind of very broad.
I think there's a lot of great nuggets in there, right? The asset class, this amazing power of compounding, right? That I don't think people totally get, right? And when that thing is working, by the way, it works in reverse too. If you're racking up a bunch of credit card debt, right? Yes. And I don't think people like that's like you can't even get to if you got credit card debt compounding against you, right? You see a lot of that. But no, that's good. I think there's a lot of good nuggets in there, Javier. All right, the last part, leadership. So you have a lens of an amazing career, consulting background, operations, boards, investing, private equity, all these different, and you speak on CNBC. And you do a lot. You've done. I think you're in a leadership forum as well, Harvard Fellows or something like that. In these, what things maybe in these crazy times? What things stay the same? What change? What would you say are the two key leadership principles that our listeners should take with them?
Wow, you're putting me on the spot. That humility, and in fact, I teach a class on leadership and governance at the university to executive MBA students. And one of the books in the class is about humility, literally. And I think that gets thrown around a lot, and right now we're more conspicuously consuming, and there's kind of back and forth on how wealth is displayed and all this stuff, and power is dispensed, and at the national level or at the company level or at the society, whatever level you want to put on it. But humility has never, I don't think, and I'm thinking about my 30 plus year career, humility has never been more important, because you actually don't know what's going to happen. And the best antidote to that is to have a very curious mind, and asking questions is worth 1,000 times more than thinking you have the answer. Because let me let you in on a secret, listeners, you have no clue what the answer is. So I think humility encaptures all that, because without humility, you actually don't have the foresight and introspection to know that you got to be curious. The reason we're curious is because we're humble enough to know we don't know anything. And then as is life, a lot of the answers you get once you start answering questions are answers you don't want to hear. Like, no. When you're raising money, when no, 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 no is much more common than yes. So that humbles you. So it's kind of this interesting circular energy thing that the best leaders that I aspire to be like, that I find as mentors, that I don't know, but I think are amazing leaders because I studied them and I read a lot about this stuff, are people that are genuinely humble because they are curious and don't know. And that makes you a better leader, I think.
Who'd be a top one? You'd say we're in top one or two that come to your mind. Say this one of the top most humble leaders that I know that you admire.
I mean, in the world of I'm going to say in the world of politics, I happen to have served Obama. I'm pretty down the center myself. I'm pretty down the center politically, but he, in my mind, I'm not going to say he didn't project as humble, but he was in fact humble. Okay. And in the world of business, it's an interesting thing because the markets don't reward you for being humble. They reward you for confidence.
They for returns.
They reward you for returns, and returns go to those that are more, I'm not going to say aggressive, but assertive. The most successful people in the world, if you're using in capitalism, are the people that amass the most capital. And the people that amass the most capital are the wealthiest people in the world. Most of them are not humble people. But if you meet them behind closed doors, or meet the people that help them run the companies, they are all extremely curious and super humble. So I don't have I don't want to protect the innocent. There's one person I'm thinking about specifically that charges ahead like they know what they're doing, but it's all A/B testing at all times because they don't know what the outcome is going to be. That's a form of humility. But yeah, I mean, I think studying leaders, especially antiquity, we're about to get the Odyssey. Christopher Nolan a movie based on Homer's 3,000-year-old poem. That was all about leadership. Troy, escaping Troy. Like, there's so many nuggets of leadership. And again, seeking out knowledge by reading is actually a form of humility because you don't know it.
Yeah. Always, and I think, it's I always like, I know a lot, but man, I make mistakes and I'm always learning. Right. And, we have the degrees, we have, done some amazing things, but I always tell people, and I don't see that stopping. Right. I'll be learning till I die. If I die. No, that's another podcast.
That's another podcast. 100%.
Another episode. Javier, how do people stay connected with you? And all the great stuff that you're doing?
The platform I use the most is LinkedIn, and it's LinkedIn.com/Javier Saade. So happy to connect with people. I love listening to pitches. I love listening to stories. I really appreciate you doing this podcast. You're doing an amazing job. Yourself using this microphone, not only the podcast, but also Angeles to amplify. So thank you.
Oh, you're welcome. Well, hey, I know you got a lot, as we talked about, you got a lot of busy things. It's an honor that you make it a priority and join us. And yeah, let's stay connected with Javier. Keep an eye out on his podcast and on all the great things that he's going on. Maybe you'll see him on CNBC soon as well. Again, Javier, thank you.
Thank you.